So if you are joining me for the live stream event, you're welcome. Just use the comment section, okay, and let me know what you think, okay. Will this economic club event have any impact on BTC? Okay. Do you think that BTC will pump or dump because of this event? Maybe after his speech. I think he will be speaking in the next 2 minutes or thereabout. Okay. So what do you think? Use the comment section. Will the economic club event actually have an impact on BTC? Okay. Will they have any impact on BTC? Let's see what happens. Okay. The market is currently the way it is. Okay, it has been like this for some time now. All right. So we are either waiting for a push to the upside, okay, to break this resistance from 24 upward, okay, or we are waiting for a dump, okay. At this support area here, once BTC breaks this below the support area, then we could be targeting 21 to 22,000 or even to 20,000, okay. So what will this event, okay, this event, ongoing event, okay, will it have any impact on BTC? Okay, I think it is time. All right, so I'll just switch off my mic, all right, so that we'll listen to the interview. Okay. Can you hear him? Can you hear him speak clearly? If you can, use the comment section and let me know if you can.
Jobs. So this was not the case before the pandemic. The pandemic really had a significant, left a lasting mark so far on labor supply in the United States. Labor force participation rate came down, and there now is a shortage of workers, and it almost feels more structural than cyclical. So that's a significant issue.
Now, you've resisted, I think, saying what unemployment rate would be acceptable to you, I think. But is there an unemployment rate that you think would moderate inflation such that you would tolerate unemployment at 4%, 5%, 6%?
I believe you can hear him now.
I think about it this way.
If you can, let me know on the chat. Let me know on the live chat that you can hear me, okay?
Maximum employment and price stability.
If you can hear the interview clearly, use the chat and let me know you can hear him.
Maximum employment means if you want a job, you can get one. So right now, the labor market is at least at maximum employment. Many would say that it is out of balance with more demand than there is supply. So what we're trying to do is get inflation down. We're not targeting a different unemployment rate. We're trying to use our tools to get inflation to come down over time.
In hindsight, would you say that when COVID hit the economy and we injected $5 trillion of fiscal policy into the economy, and the Fed did quantitative easing and other related things, kept interest rates very low, would you say in hindsight that was a mistake, or was the right policy at the time?
I think you have to go back to the decisions that were made in real time, and it was something nobody had ever seen. The global economy came to a virtual standstill. People were talking about depression. People were talking, and we didn't think we had no idea when we would get vaccines that worked. So Congress took very strong measures, and we took very strong measures. And you see where the economy is. You've got a very, very strong labor market, but you have high inflation. As I mentioned, we're at the beginning of getting that down. If you look around the world, though, at other countries, they're also experiencing high inflation, including countries that didn't that didn't do as much as we did, either from a fiscal or monetary standpoint. So that tells you, though, that a big part of this inflation is actually related to the pandemic itself, the shutdown and then the reopening. That's a big part of it.
Now, the quantitative easing program has increased the balance sheet, I guess, of the Fed. And what is your balance sheet now?
I think it's $8.4 trillion.
You must sound like you know. 8.4 trillion.
That was yesterday's number.
Okay, all right, 8.4 trillion. What would you like it to get down to over the next year or two? Is there some lower number?
So we are in the process of shrinking the balance sheet actively, actually passively, I should say. So what happens is, as Treasury securities on our balance sheet mature up to a cap, a monthly cap, the balance sheet shrinks in that amount. Same thing with mortgage-backed securities as they are prepaid, or so the balance sheet is shrinking. In terms of the target level of it, we haven't put a specific dollar number on it. The idea is we're in a regime of ample reserves. Reserves are basically deposits at the reserve banks. And when we get close to that level where we feel that reserves are ample, kind of where we were before the pandemic, then we'll slow down and we'll sort of test where we are. But it'll be a couple of years, we think, till we get to that level.
The Fed does not sell securities. It waits for them to mature, and then you just cash them in, right? You're not in the market selling securities that are not yet mature. Is that correct?
That is correct. It's also correct, though, that we've said we would consider sales of mortgage-backed securities, but I will tell you that's not something that is on the list of active things being actively considered.
So some people are worried about the federal debt limit, and that we might not be able to extend it on time. We have $31.4 trillion of debt. Are you a little worried about the debt limit not getting extended?
So the debt limit is really something for the fiscal authorities to deal with. The Fed, our only role in this is that we're the fiscal agent of the Treasury Department. We're not a policymaker on that. And I will just say this. This really can only end one way, and that is with Congress raising the debt ceiling in a timely fashion so that the U.S. can pay all of its bills when and as due. That's what has to happen. And if that doesn't happen, no one should think that the Fed has the ability to shield the financial markets or the economy from the consequences of moving too slow.
So you don't have any program in place ready to go if, in fact, the debt limit isn't passed in time?
This is something that Congress has to deal with.
And the so-called $1 trillion gold coin solution is not one you're in favor of, I guess.
As I said, this ends in only one way, and that way is Congress voting to raise the debt ceiling so that the U.S. can pay all of our bills.
Okay. In terms of consultation, do you consult regularly with the Treasury Secretary or the head of the National Economic Council or the President of the United States? How do you kind of relate to the administration?
For a long, long time, 60 or 70 years, I think there's been a weekly breakfast or lunch with the Treasury Secretary and the Fed Chair, and that's what I've had with Treasury Secretary had as Fed Chair. I've also had regular, or call it irregular lunches with the head of the NEC. We also have regularly scheduled lunches with the Council of Economic Advisors, and that's really the institutional structure of our contacts with the administration.
So, in the way the Fed works today, if you could reconstruct the operations of the Fed, would you change the legislation in a way that's sufficient as you can realistically operate?
We're not looking for any changes to the Federal Reserve Act. I mean, I think it does work. The structure that I discussed earlier, where you've got the 12 Reserve Bank presidents coming in, what that assures, really, it institutionalizes diversity of thought. So we get different people coming in who've got different backgrounds, different careers, and I think that's enormously beneficial to our decision-making process.
So there has been discussion recently about the Fed, some Fed members, Fed board presidents, selling their securities and maybe not doing everything they were supposed to do in terms of disclosing it. What have you done to fix that process?
We put a new system and a new set of rules in place, which I think are best in class for a public institution like the Fed. And the innovations were that if someone wants to sell something that they own or buy something, they have to clear that in advance with staff at the Board of Governors, and then you've got to wait 45 days for that to execute. Also, you can't own individual stocks, and you can only authorize these transactions or execute them during specific times. And we disclose, of course, all of these are disclosed. If your idea is to trade things, buy and sell them because you think you think this stock is cheap and that kind of thing. That's just not something that will work.
So what is the salary of the chairman of the Federal Reserve Board?
It's around $190,000, I believe.
Okay, 45 days. Or?
That's right. We have family expenses that, if we have them, that exceed my salary.
All right. So
Fair salary for the job.
the market is playing out. Market is playing out, and this has actually hit.
How do you coordinate
Okay,
with,
made all
central
my
banks,
trades
let's
to
say,
hit
in
take
England
profit.
or Japan or
All right.
China?
So my trades have actually hit take profit, and I do appreciate that. Well, BTC go to 24K after the interview ends, or after the interview will it go back to 24K? I need to know your thoughts. Okay, use the comment and let me know what your thoughts are.
Most of them. And so what we're talking though about is really what's happening in the economy and how are you thinking about policy and that kind of thing. It's very important that we keep those discussions going, because particularly in a crisis, you're going to need to know each other, and you're going to be able to trust each other.
And do you think the U.S. economy is pretty much in control of its own inflation rate, or are there events outside the United States like what China's doing or the Ukraine war that are affecting inflation and make you nervous about where inflation might be going?
We have the tools, the Fed has the tools to achieve our 2% goal over time. But inflation in the United States is, of course, very closely related to things that happen here, including the balance between supply and demand. It's also affected by, for example, commodity prices that are really set on the global markets. Oil and agricultural commodities are priced globally. So there are certainly, it's an integrated global economy and global markets, and we are part of that.
So you get data from all the various government agencies, but do you ever use anecdotal things, like you go to the supermarket and some prices are high and say this price is high, or do you ever get anecdotal things, or people ever call you up or friends and say, by the way, you should do this or that? Do you ever get that kind of information, or do you only get it from the government reports?
I mostly get data, but I will say I do believe that anecdotal information is very useful. And one of the things the reserve banks are great at is all 12 of them have big operations where they talk to businesses and nonprofits, universities, every sector of the country and the economy, and they bring that back to the FOMC meetings and they talk about what they're seeing. Because often, staring at data is great, but you need to have a story, and I think hearing the stories that people tell, it does help me to sort of assess what's going on out there.
So, as the chairman of the Federal Reserve is obviously an important job. How do you reduce the stress level you have? I mean, you can't be watching economic numbers all the time. So, what do you do to relieve the stress other than interviews like this?
The usual things. I read pretty light fiction, detective and spy fiction. I exercise as much as I can. As you know, I like to ride my bike. I play the guitar, play music.
Is that safe, riding a bike? Dangerous? And
it's safe. It's safe if you stay on the bike. And
you're good at that.
That's what I try to do.
And you still play the guitar? Or
I do. Yeah.
Your hair is awfully short for playing the guitar. Don't you need longer hair? Was your hair longer when you were younger?
Grayer. It's too gray too.
Okay. So let me ask you about the issue of what it's like to be chairman of the Fed. You can't go have regular friendship kind of dinners or meetings. Can you? People treat you much differently, I assume, than they used to, right? When you go to a restaurant, are people listening to what you're saying or something like that?
I have always thought that my jokes were funny, David. But no. So yes, it's I've never been a public figure before like this, and it's a great honor to serve. But yeah, when you go in public places, you have to be very careful.
And does the President of the United States ever call you with any advice, or you don't? Did President Trump ever call you, or President Biden ever call you, or?
Well, I think it's a matter of public record that President Trump did used to call me from time to time.
What did he call you?
No, I haven't had that kind of. I haven't gotten any calls from President Biden.
Okay, so the biggest challenge you have now is being able to keep a straight face, not telling people what you're going to do in the future, and look at the data and then come up with the right solution, right?
I think the biggest challenge we face at the Fed is completing the process of getting inflation down to 2%. And what I want to point out is that we're seeing disinflation in the goods sector. We expect to see it in the housing services sector, and these are the three parts of the core PCE inflation index that we look at. There's 56% of the economy, which is the rest of the services sector. It's the biggest part, obviously, and we're not seeing disinflation there yet, and that's going to take some time. We need to be patient, and we think we're going to need to keep rates at a restricted level for a period of time before that comes down.
When you made your speech the other day, when you talked about the Fed discount rate, you used the word disinflation 11 times. Not that I'm counting, but 11 times. So you were saying that disinflation is beginning to appear. Would you use that word 11 times again today after the jobs report, or would you less inclined to use that word so much?
I might use the word. I would certainly use the word disinflation, yes, which means declining inflation, and I would call it declining inflation too.
And today, what about the debt, the total debt of the United States, which produces some inflation, 31.4, leaving aside the debt limit? Are you worried about the total indebtedness of the United States producing inflation, or you don't think that's a big problem?
Yeah, it's not the level of debt. I would say the thing I'd say about the level of debt is really, first of all, it's not the Fed's job, but I would say that we're on an unsustainable fiscal path at the federal government level. That has been the case for some time, and it's something we'll have to deal with. It's better to deal with it sooner rather than later.
Now, many of your predecessors were economists. You're trained as a lawyer. So they spoke in what I call Fed speak, which is to say incomprehensible kind of economic language, which was done intentionally, I think, sometimes they would say. So you tend to speak in English. Has that been a plus, you'd say, when you're dealing with members of Congress so they can understand what you're saying?
I like to think so. I made it a real priority to engage a lot with Congress. In our system of government, unlike the parliamentary system, our accountability is to the legislature. It's to the Senate and the House, and particularly the two oversight committees, the Senate Banking and House Services. And what we're doing and listening to their concerns and share with them how we're thinking about things. And I think they appreciated that. But that is, we have this precious independence. We can't be removed from office. We serve in these long terms. The other side of that has to be accountability and try to reach, the people of the United States through their elected representatives. So this is a very high priority, and we're going to keep doing it.
So when you testify in front of Congress, how much time does it take to prepare for that? Is that a 1 hour preparation session, or is it a 1 day session, or a 1 week session? These are supposed to be monetary policy hearings under the Humphrey Hawkins Act, and they're actually on anything that's any political issue. So it's quite extensive. You have to prepare for everything that the Fed is involved in, and many things that the Fed is not involved in. So it's a lot of preparation. So when you get questions from some members, you have to bite your tongue and say, "Why are you asking a question like that?" Or you never have that problem.
That never happens.
Never happens. Okay. All right. Well, good. So today, as you look at the country's economy, what is the biggest worry you have about inflation? Is it just that the fiscal policy is not completely under control? We have exogenous events outside. What is your biggest worry about inflation today?
Really, it's kind of what I was saying earlier, which is we're just at the beginning of this process, right? Goods inflation. So we need that process to continue. The whole thing began, the whole inflation began with people not being able to buy services instead of buying goods, and then global supply chains collapsing, and so couldn't get goods, and prices of goods went up, and that's where it started. But that is now starting to get better as supply chains are improving, and as people are rotating their purchases back to services. You move on, though, we're not seeing it yet in housing services, which is either rent or the ownership, the imputed costs of house ownership. But we expect to see that. So we need that to happen. That's another big part of the economy. It's got to come. It should come in the second half of this year. Then the biggest piece of it, and what I worry about the most, is when are we going to see disinflation or declining inflation in core services ex housing? So that's what I worry about. The last thing I worry about is just another exogenous event. It's a risky world out there, with the war in Ukraine and the reopening of China, and those are things that can affect our economy and the path of inflation.
Right. So the balloon was not your word, though. You don't care about the balloon.
It's not within our ambit.
Okay. So today, the Federal Reserve gets data from all over the country, and are you convinced that you get the best data, you have the best data collection methods, or do you think it's not as modern as what Wall Street gets?
So most of the data are just the same. We don't collect the data on unemployment or inflation or most things. So most of that's just government data, and a lot of that's, for example, very high quality. The labor market data is very high quality. What we get, which I think is better and different from what everybody else gets, is what I mentioned earlier, and that is the reserve banks putting together the beige book, putting together the beige book, and also coming in and sharing the anecdotes and what they're hearing, what's happening with them. Each district is different. You have agricultural districts, and energy districts, something. So that I think our anecdotal, but also just the haul of information we get through that network is I don't think anybody else has that.
So do you consult regularly with some of your predecessors? I mean, obviously one is Secretary of the Treasury now, but Ben Bernanke, for example, or
I do. I talk to former Chairman Bernanke. I talk to Secretary Yellen. I still talk to Alan Greenspan now and again.
And when you're dealing with your colleagues on the Fed board, and you disagree with them, you say, look, I'm the chairman of the Fed, I am the person who has to make the final decision, and this is what we should do, or you don't quite do it that way?
It's a process of reaching agreement, and I hear what people have to say, I tell them what I think, and then I'm the one who has to bring a proposal in front of the full committee, not just the board, in front of the full committee on monetary policy. And it works. We have to reach an agreement, and we get to a place. I think you can tell today we are blessed with a diversity of perspectives on the FOMC with 19 people. Of course we are. But you have one thing that unites all of us, and that is a very strong commitment to getting inflation down.
So in some parts of Washington, people say, if you give me this, I'll give you that. I'll trade this for that. You never do that at the Fed when you're coming up with a decision. I'll do what you want if you do what I want. That doesn't happen ever?
Not really, no.
Oh, okay.
Like you mean a better office or something like that?
Well, just, I'll say what you want me to say if you say what I want you to say or something. That never happens, right?
No, that doesn't happen. I mean,
and when you want to talk to members of the board, of the Federal Reserve Board, do you go to their office or do they come to your office?
I like to do both. I mean, I really don't like to sit in my office all day and just have people come and see me. I like to go barge on people, and I think it's much better to get up and walk around and see people.
Well, the Fed has been pretty good at avoiding leaks of its decisions. How do you do that? Because most people in Washington are not so good at that. How do you avoid leaks?
We do have, we've got very strict rules around confidentiality, particularly around the written materials that we have. We publish these things internally for the FOMC meeting, the memos and the Teal book and all that. But the other thing to remember, though, is we're not trying to hide our decisions from the public. We actually, in the modern monetary policy, we want the public to understand how we think, how we're thinking, and if markets really understand how you're thinking, and a new piece of data comes in, the markets will go, well, they're going to do this, and it sort of happens organically. And that happened all last year as we were talking about raising rates. The market priced in rate increases long before we actually enacted them. So we want to be transparent. We're not looking to surprise markets with these decisions.
But from the time that you make your decision on the FOMC, whatever time it is at the end of the day, and your press conference at 2 o'clock or something like that?
2:30.
2:30.
Yeah.
So your decision is made by 2 o'clock or whenever it is, or something like that. So you got a half hour. But you have to avoid leaks during that half hour because that's very market sensitive information. How do you make sure nobody is calling their spouse and saying, guess what we're going to do?
Well, people take this very, very good. So, a period of a couple of hours after the meeting until we announced the decision, but we announced the decision at 2. The press conference is at 2:30. So I think it's a fairly small group of senior staff and policymakers that kind of know what happened and what we're going to say, and I just think everybody understands that you've just got to be really careful with that.
To go back to jobs discussion, if next month you had another 519,000 jobs created, net jobs. Would that be good or bad from your point of view? I mean, a lot of people working, but maybe producing more inflation.
So we don't have the luxury of thinking about good or bad. It just is what it is. So, but I would say again, most analysts, most economists would say that to get inflation down from high levels that we've had, if you look at history, there is some softening in labor market conditions that goes along with that, and that is still, very possible and indeed likely here. Some softening in labor market conditions. However, this cycle is different from other cycles because of where it came from, and it's just confounded all sorts of attempts to predict what it would do. So it is good that we have seen very strong labor market, but at the same time we're seeing wages moderating. Wage increases are still very high, but wage increases have come down to a level that is closer to what would be sustainable, still well above what would be sustainable with 2% inflation. And same thing with inflation. Inflation is starting to come down and the labor market hasn't softened. We do expect that it will soften, but it will do what it will do. Our job is to get inflation down to 2% and preserve maximum employment.
So when the FOMC meets, as it does regularly, eight times a year.
Yes.
8 times. You pretty much know how the decision's going to come out before you actually get together because you've been talking to each other. Or does the meeting of the FOMC change minds in ways that you might not have expected before the meeting started?
It depends on the meeting. I talk to each of the 18 other participants at least once, and we go through everything. What's your analysis of the economy? How are you thinking about monetary policy? How are you thinking about the path forward and all of that? So in some meetings, I will say some of the time you get into a discussion at the meeting which suggests that maybe you should communicate differently, and then we'll think about that. And we might actually take a break in the middle of the meeting and then go off with a smaller group and think about that and come back and make changes. Sometimes, though, everything plays out as expected.
And when you're having these FOMC meetings, I assume somebody sweeps the room to make sure there's no bugs and anything.
Yes.
All that. No leaks.
No.
Okay. And today, as you look forward, as we are going forward for the next remainder of this year, your basic view would be you'd be happy if the inflation rate were to get down by the end of the year to 2%, maybe unrealistic, but the core inflation now, or overall inflation, you think is about 4.5%, something like that, or what would you say it is?
It's in that range. There are different measures.
Okay.
Yes, we expect significant progress on inflation this year, and again, it's our job to produce it. And I want to say again, we throw these numbers around, but the reality is we're going to react to the data. So if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than was priced in.
So if I wanted to go get a mortgage on a house I was going to buy, for example, you would say I'm not going to be any better off waiting till next year than now because rates aren't going to come down that much at the beginning of next year, so I might as well get the house now, mortgage.
So surprisingly enough, I get a lot of requests for advice on those kind of things.
And you don't give any?
And but I really can't. Okay. I really can't respond.
So, so on the whole, to summarize where you are, you're basically saying that the jobs data that came out was a little bit surprising, but in the end, you're taking into account, and you're pretty comfortable with the guidance you gave last time, and you're not prepared to give anything that's completely different guidance than you gave last week.
Well, I mean, this is a world in which we've had the labor market report, and I think it underscores the message that I was sending at the press conference and in the meeting, that we have a significant road ahead to get inflation down to 2%, and I think there's been an expectation that it'll go away quickly and painlessly, and I don't think that's at all guaranteed. That's not the base case. The base case is for me is that it will take some time, and we'll have to do more rate increases, and then we'll have to look around and see whether we've done enough.
Okay, and 2% is the rate we had for the last 25 years before inflation came along. But prior to that, for most of U.S. history, we were higher than 2%. Is it that 2% is we're now so used to 2% after 25 years of it that you think that's the appropriate level?
We went went through this long period where inflation was really anchored around 2%, and we think that, and you know, economists think that that's because people start to expect 2% inflation. And inflation, it's in a way, if everyone expects that prices are going to go up, prices and wages are going to go up 2% per year, then plus productivity in the case of wages, then it will. That's what will happen. Having price stability, real price stability for an extended period of time, is just enormously beneficial to the public, because you can then, on the back of that, you can build a very strong labor market, as we had. We had a labor market with really 3.5% unemployment in 2018 and 19, and we had inflation running, you know, just barely getting to 2%. Wages moving up the most for people at the lower end of the spectrum, and so this was we all want to get back to that place, but the bedrock of the whole thing is to get inflation under control.
The unemployment rate hasn't come down as much as people are going up as much as people thought. In part, some people say because we don't have as many immigrants coming in the country, legal immigrants coming in, taking some of the jobs that otherwise would take. Do you think immigration is an issue in terms of giving us more labor workers, or do you think that's not a factor?
So just as a matter of arithmetic, it was a factor, because there was very little migration across borders during the pandemic. And that was part of what was happening, particularly in certain sectors like the agricultural sector and food service and things like that, where there just weren't the people. However, just very recently here, the immigration data have turned up again, and I think that may be part of why people are feeling somewhat less pressure in the labor market to find workers. This is an issue not for the Fed. Immigration is obviously a political issue. We do not seek to be a player on this, but it's just a fact, though, that you know, right now the United States has fewer available workers than it has jobs plus job openings.
And when you increase interest rates, the traditional effect is to increase the value of the dollar versus other currencies. Do you have any concern about the value of the dollar going up too much, or that's not something you comment on?
So the responsibility for the exchange rate really rests with the Treasury Department and the administration, not with us. Of course, that's another financial variable that goes into every economic model, but we don't look at it as something that we're working on.
All right. Well, I think I haven't been able to get you to say anything you didn't want to say. You know, I would say, Jay, I know you a long time. I think you've done a great job in a difficult situation. I appreciate your service to the country at $180,000 a year. Whatever the salary is, something like that. So thanks very much for being here, and thank you for your service.
Thank you, David. Great to see you. Thank you.
All right, so the market actually played out, okay, the way I I thought it will. All right, so when there are this, you know, whenever this event comes up, okay, you always see the initial gra that the market will be doing. Okay, so market will always pump, all right, and at a certain point the market will dump. So exactly what it did, all right. So I took some trade to the upside, and that actually ended up in profit. So right now what we are going to do is to actually look at the market, okay, after this pump and dumped. We're actually going to look at the market and see what it ends up with, okay, what it ends up with. The direction is going to take, whether it will continue to the upside or it will continue to the downside. Okay, so I hope you gain value from this. Now when the next event, okay, I will try as much as I can to make sure that I'm always live streaming such event, and we equally use that opportunity to be taking trades, live trades at together. All right, I believe that at the end of the day the market will you know, the direction of the market will be to the upside. I'm hoping that Bitcoin will go back to 24k and even break above 24, okay, to the higher side. All right, so let's see how this plays out. Hopefully by tomorrow we should get a clear direction of where the market is going to, whether it will continue to the upside or it will go to the downside. There's another event coming up on Friday. All right, so on Friday we are equally going to have this live stream, so make sure you are subscribed to the channel. Okay, make sure you are subscribed to the channel, that you're not missing anything, so that we can get it started. Okay, now before I end the live stream, there's something I want to share with you all before I end the live stream. Okay, that is BYBIT. All right, if you don't have an account with BYBIT is actually listing this core token by tomorrow. Not just BYBIT, a lot of other exchanges will be listing this token. So it means that around the core token, if you don't know the core token is a token of the core DAO. Okay, that is currently creating a platform for if I come to the website, hold on please, I'm coming. All right, sorry about that. So the core DAO has actually been doing a lot when it comes to scalability, okay, and then security in and decentralization. Okay, so they are actually created a token out of this, which is the core token. So the core token will be listed on BYBIT for trading. Okay, this will be listed on the spot trading, so you can trade this against USDT. So currently, as you can see the countdown here, this will be listed tomorrow at exactly 12. Okay, 12 o'clock, and this will be, that is 17 hours from now. This is when this token will be trading. Okay, 17 hours from now, meaning that that this should be around tomorrow. If you're in Nigeria, this should be around tomorrow between afternoon and evening time. Okay, that is when this token will be listed on BYBIT for spot trading. It will be listed on other exchanges, I think 2 or 3 more exchanges. All right, so currently if you do this, there is a giveaway that BYBIT is actually doing. Once you trade this token, okay, you can qualify for those giveaway. And equally, if you go to the Twitter handle of the core DAO, okay, if you go to their Twitter handle, they're equally doing giveaway that same tomorrow when this coin will be listed for trading. Okay, so they are doing some airdrops. Okay, when this coin will be listed for trading, they're equally doing a lot of airdrops to all the holders of this token. So it means that you must be holding these tokens to actually gain access. You can follow them on Twitter to actually get their airdrop that they will be doing. Okay, so I think they said about 20 or 20 something% of the coin will be given, the total supply of that. Okay, 20 something% of the total supply will be given out to users of the platform. So it means that you must be holding the token to be able to qualify for this. So for you to be able to trade the core token on the BYBIT exchange, you need an account with BYBIT. You need to sign up. Okay, there's a link in the video description if you don't have an account with BYBIT already. So if you have the core DAO token already, fine, but if not, you can actually get this from the BYBIT exchange that tomorrow. Now, one good thing I need to let you know about new coin listing on BYBIT. Let me go ahead and look for the token that was listed today. Okay, yeah, this is a token that was listed today. This token was listed, and already this token is doing 31% already. So if I go to trade now, let me open up this token and tell you one good thing you should know about new coin listing, okay, on the BYBIT exchange. So when a coin is newly listed in an exchange, okay, there will always be a pump. All right, there will always be a pump in the market. Okay, the coin will be listed just as you see here. The listing price was around 0.20, okay, and this pumped up to around 0.28, okay, and then retrace it back again, went up again to 0.30, all right, and then it retraced it back again. So the retracement that it retraced back, it is actually I think it actually retraced to around 0.25, and now is pumping back again. Okay, so one good thing with new coin listing is that if you get into the market early, all right, when the coin is newly listed, you can actually buy low and sell high and make some profit, which is exactly what is going to happen with the core DAO that the core token that BYBIT will be listing tomorrow. Okay, this will be traded on the spot market, so you can actually I'm going to leave this link in the video description. All right, I'll leave the link to this countdown in the video description. If you go to your spot trading market, once you just type in core USDT, you will see it will bring you to this countdown page. Okay, so once it is listed, this will be trading 17 hours from now. Okay, so if you come in very early, you can actually buy the token. There are a lot of speculation about this token, there are a lot of hypes about the token. Okay, and coupled with the giveaway or the airdrop that the CoreDAO is actually organizing that same tomorrow, and the fact that it will be listed on multiple exchanges, this will give you the all you need to actually take advantage of it once it is listed. If you come in very early, you can actually buy the token once it is listed and then sell the token once the price go up to a certain level. Okay, now if you miss the pump, the initial pump once the coin is listed, please allow the coin to retrace back, just like what happened here. Okay, allow the coin to retrace back to a certain level. When it retraces, okay, you can buy this token and hold. Now this token is one of my long-term project. Okay, I'm going to buy and hold this token for a long term. All right, if you want to learn more about the CoreDAO, you can actually go to their website. Okay, you can go to their website, you can go read out their white paper and see what exactly they're actually doing. I'm equally going to leave a link to this article here on BYBIT Exchange. Okay, I'm leaving a link to this article on BYBIT Exchange. This explains everything about the CoreDAO token, okay, the project, what it is all about, okay, why a lot of people are actually very optimistic about this token. Okay, so you can actually, I don't know the price at which it's going to be listed, but if you buy this token for a long term, I believe that it will profit you a lot. Okay, so there are airdrops that same tomorrow. As I said earlier, there are airdrops that will be given out that same tomorrow, that this will be listed for trading. Okay, there are a lot of other benefits that are here. Okay, but briefly, if we go to what the core is, okay, so core is a new blockchain that hopes to revolutionize Web3 design. Okay, it attempts to provide scalability, security, and independence by combining proof of work, okay, and then delegated proof of stake mechanism. So scalability here is the key. Okay, the scalability here is the key, which a lot of other network cannot do. All right, so once you scroll down here, you will learn more about all of this. All right, everything that they want to achieve, everything their aim, everything is stated here on this article. So I'm going to leave a link to this article so that you go read it out. Okay, but the most important thing is that this will be listed on BYBIT for spot trading. You can actually buy this token low, okay, and sell high, and then wait for it to retrace. Okay, when it retraces to a certain level, you buy back again, and that will enable you to make some profit. If you want to hold it for long term, then when the airdrop actually finally takes place, okay, the airdrop here, when it takes place, it means that you'll be qualified for that once you are a holder of this token, because the airdrop is to users of the holders. Okay, so 25.03% of the core total token supply will be distributed to the community. Okay, so the remaining balance will be unlocked over a period of 2 years. Okay, then such airdrop distributed by core will reward early users and give them the ability to participate as validators, okay, and DAO members. All right, so if you are interested in the core, you can actually I will leave the link to this. Okay, the best way to participate in this is once it's listed 17 hours from now. Once it's listed, you can trade it to make some profit on the spot market. All right, then when the market retraces back to a certain level, you can now buy the token and hold for a long term. All right, so I see a lot of opportunity coming with the CoreDAO token, and I believe is a coin that actually can 10x or even 100x your investment. All right, so make sure, if you don't have a link an account with BYBIT, make sure you use the link in the video description to sign up for one. All right, get your account verified, fund your account, and be ready. All right, you can do all of these things before this period, okay, and be ready for the trading. If you have an account already, just fund your account with any amount you can afford and be ready to take advantage of the listing of this new token on the BYBIT exchange and start making some money for yourself. Okay, so that is all I have for you in this video. All right, so if you now have questions, if there's anything you want to ask, okay, you can go ahead and ask your questions. Let me see how best I can actually address that before I end the live stream. So you can use the comment section, okay, for your questions. If there is no question, then I will just end the live stream here. I hope you gain value from today's live stream. All right, so that is it for today, guys. Go and fund your BYBIT account and be ready to trade this token. Okay, be ready to trade this token. If I have the time tomorrow, at exactly when this coin will be listed, I will go live again. All right, so that I can actually share with you how to take advantage of new coin listing on the BYBIT exchange and make some profit for yourself. Once again, you need to get in very early. Okay, you need to buy when the coin is just newly listed. All right, and wait for the coin to pump to a certain level, you sell. All right, and take profit. Then if you get in when the coin has already pumped, all right, just give it time to stabilize or to retrace back. Then you can now start trading the coin. Okay, so if I have time tomorrow, I will equally go live at this exact time when this coin will be listed, so that we can actually do this together and benefit from it. That is it, or that is all I have for you for today. I'll see you guys in my next video.